Hi everyone, my name is Piterpakulski. Today we will continue building financial model for Uber, Lyft, taxi business idea. And today we will be putting these revenues and this monthly mileage inside the timeline. And we also need to create some algorithms. So for example, we start operating activity on May 23. Here it is. And let's assume that we won't get these revenues right from the first month of operating activity. Let's assume that we will be reaching these revenues in May, June, July, August and September, step by step. And today we will create the block of inputs for that, and we will put the revenues themselves and the mileage itself inside the timeline. So first of all, let's well, by the way, if you find this video valuable, as usual, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will give you the link to the playlist where I will be putting all these tutorials, so you may watch them one by one. And when I finish this financial model, I will place all the links on these tutorials in the description of this video as well, so you can watch all the story from scratch. First of all, let's briefly run through what we already done, all the lessons that we've already did. So we have a unique rule that blue color is a color of our inputs. So here we have the library of types of trips. We can play with their mileage, we can set up their mileage, we can set up their duration, we can set up their revenue, we can switch them on and off from calculations to see the simple discounted payback period with or without this or that type of trip. We have local, global coefficients for mileage, duration of the trip, revenues of the trip. Then we moved to creating of portraits for the typical days of the week. So for Monday, for example, we will do this amount of trips. We are assigning them coefficients, global and local. We can switch on and off different types of trips from specifically for Monday, and the same exercise we do for Tuesday, Wednesday, so we can specify how many trips we make each day of the week. This is the coefficient to play with the amount of trips. We can switch on and off different trips inside Wednesday, Thursday, Friday. So this will be all needed during the next steps, further 6, 7, 10 steps ahead, when we will be playing with scenario modeling, stress testing our model. So all that stuff will be needed later. Then we created the interface for each day of the week. We can, for example, switch the revenues of this or that specific day. For example, we don't want to be online during the weekend, or we would like specifically be online during the weekend. We can play with coefficients for the linked to the amount of services, amount of trips that we make. We also created the limitations for the daily mileage, for the daily duration of the trips, to make us be able to live in the realistic numbers. So for example, we can't work more than 7 hours, or the car can't ride more than 300 miles a day. So we can play with all these inputs. And now Then we consolidated the revenues inside the typical year and mileage inside the typical year. Then we specified when we start the operating activity. Then we created the timeline. And now we need to put the revenues and mileage inside this timeline. So let's create a new block of inputs. We will call it reaching the revenues, target revenues. So now let's say that we have maximum of 12 months to reach the target revenues. So the first month of operating activity, month and year, I will put from here, from this block of inputs. And what we will do now, we need to create some projection to the 12 months interval and link the percentages of reaching the revenues to these numbers. So first of all, we will create a very simple table on the top. So if this is the January, then it is the first month inside the typical year. We will be just using VLOOKUP function. So let's use VLOOKUPs. This will be a very simple story. We are searching this value in this table. Here we will need the second column and exact match. So this tells us that May is the 5th month inside the typical year. If we move our project to August, we will have August. It is the 8th month of operating activity, 8th month inside the typical year. And now let's count 12 months of the first 12 months of operating activity. So here I will write a simple formula. If this equals to 12, I will start a new year, otherwise I'm adding 1 to the previous value, closing the brackets. Then I'm gonna extrapolate this formula to the right, so you can see that a new year started. And now I will go back, just add a column with months here. And I will use VLOOKUP function again. So this time I will be searching for this value inside this table. I will need the second column and I will need exact match. Let me freeze this table because I'm going to extrapolate this formula to the right. So here we have months, the first 12 months of operating activity. And now let's do the exercise for the year. So if this equals to 12, then we are adding 1 to this value. Otherwise, we are picking just the old value. So here we can see how the year changes, and here we've created the timeline of the first 12 months of operating activity. So the parameter here in this table, oh no, so this will be the input. So I'm coloring these cells in blue because blue is our color for all the inputs. So this will be percentage format, and here let's say we're going to reach our target revenues. For example, 10% will be at the first month of operating activity, 20, 30, 40, 50, 60, 70, 80, 90, let's say 95, 97, 99 and 100%, just for example. So now if we, for example, change the values here to March, so we will see that our timeline displays to March, and here we can see March as well. And now we need to put these values here to assign these values to this month number inside the operating activity. So now let's add here a line, call it reaching the target revenues, and let's write a simple formula for this line. So if this value, the month count of the operating activity, equals to 1, then we will use this value, this percentage value, let's copy this formula. So this will be the number of months of operating activity. So if this value will be more than 12, we're going to extrapolate this value. So B, then we are taking C, B, C, D, So here we can see all these percentage values participate in the formula that we read. If there's going to be another value, we will put 0, and we are closing the brackets 13 times. And now I'm going to extrapolate this formula to the right. So here you can see these percentage values assigned to the specific month of operating activity. So for example, if we want to displace the project to July, we can see how these values displace to July. And for example, if we want to for example change these values, we can do it like this, for example. So we can see how all these cells are being updated. So later, when we will be done with the whole financial model, the business starters always playing with these inputs, because they are able to see inside the cash flow statement how the amount of financing is changing depending on the values in this block of inputs. So this block of inputs is very important inside the model, because it shows you how much of additional financing caused by operating losses you will need to start your business idea. So this is very important, because you won't be able to reach the 100% of revenues like this, target revenues, right from the first month of operating activity. So that's why I'm showing you this story. So what's next? Now we need to so we will copy the timeline. Let's say revenues and mileage in timeline. So first of all, we will go to the, let's say, the timeline. This will be step 1. Here we will place revenues. Here I will place mileage. So I'm taking revenues from here, mileage I'm picking from here. Now I'm extending it to the right. Then I'm going here, press equals, picking the data from this January. Then I'm going to extrapolate these formulas. Now let's go back and let's create another table. This time this will be a final table for the revenues and mileage. Let's name it step 2, for example. So what we will do now, we just need to take this value and multiply it on this percentage value line that we already created. We just freezing the line, and now we just can extrapolate this formula to the bottom and to the right.
So now we've calculated the revenues. So these are the revenues. This is the mileage inside the timeline. So if we want to, for example, place here 15, we can see how this number is changing. So we can play with this value the way we want. We can displace our project, for example, to November. We can see how all these algorithms displaced our project. So this was the topic of today's video. I hope you enjoyed. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will give you the link to the playlist where I will be placing all these tutorials, and when I will finish this model, I will give you all the links in the description of this video as well, so you may watch all tutorials, all lessons one by one, absolutely free. So thank you guys for watching, see you next videos, thank you and bye.